Good afternoon, everybody. Welcome to the Small Account Challenge. Matt will be running a little late, so we're going to discuss a few things before he gets here. Please take a moment, read the disclaimer. We are not financial advisors. We are not late, even though Tim seems to think we are. I have no idea what your situation is. Please do not do anything that I am doing. Please do your own due diligence. Thank you very much. Take everything we say with a grain of salt. Man, what a week this was. And we got some big news out of the gate to discuss. So let's bring this up. Good old Elon makes a really big announcement. Not sure if everybody saw the event, but Elon announced the TerraFab, which is a joint Tesla, SpaceX, and AI chip fabrication facility. It's going to be vertically integrated. It will produce logic chips, memory, and advanced packaging under one roof near Tesla's Gigafactory in Austin. The project is going to involve a $20 billion initial investment and targeting 1 terawatt of annual AI compute. 20% output supporting Tesla's Optimus robots and full self-driving systems. 80% allocated for space-based AI infrastructure, including solar-powered satellites. I got to tell you, maybe I was wrong not to grab SpaceX shares. I don't know. I didn't like the terms that they came under. I was offered them. I really didn't like the terms, but live and you learn. Maybe I should have just said, you know what, screw it. I think that this is going to be big. I really do. The valuation on Tesla may suck right now, and the forward earnings may not be as impressive as other companies, but if you believe that space is really the next frontier and we're going to be a multi-planet society, then Tesla and SpaceX could do really well. This is really interesting. It's going to be interesting to see what Elon's able to pull off. Matt is in the chat. I'm here by SD for 15 minutes, or did he do that? So now you have to wait because Steve didn't listen. I texted you, Matt. When you say delay by 15, I thought you meant just start talking. I apologize, Matt. Anyway, Steve was shaking for his fix, Dookie Pie. Very funny. Very funny. Charles, what's going on? So look, Tesla could be really interesting. I'm not as heavily in it as I was previously. I've moved assets around, but they may be able to pull off the impossible again. I've always said that Optimus is going to be, in my opinion, the future of the company. So we got a lot of things going on in the market right now. The S&P and the market down for 4 consecutive weeks. One of the big aspects to look at is that gold plummeted over 10%. And when gold goes down in an environment like this, in my opinion, it's signaling stagflation. We're seeing an environment that is completely risk off. I mean, if people don't even want to buy gold in this environment, I mean, that's crazy. The hair is not perfect. What are you talking about? It just dries like this. Hairspray all the way. Okay. There's no hairspray. If there was hairspray, it wouldn't look like this. I promise you. I wouldn't be able to run my fingers through it and mess it up. So we got the Fed. They're holding rates where they are. They sounded hawkish, in my opinion. Jay Powell seems like he wants to stay on until the probe is over. That could screw up the confirmation hearings for Kevin Warsh. We'll see what happens. We may not get a new Fed chair in May. We'll see what happens. That may get delayed. Who knows? A lot of crazy things. Brent crude grabbed all the headlines. We had a $20 swing as energy infrastructure attacks occurred in the Middle East. The Pentagon deployed 3 warships and 2,000 plus Marines. I don't want to see boots on the ground. We'll see what happens. I think tomorrow's going to be an extraordinary day. Super micro, I saw a lot of people in the chat discussing this, so I will be happy to discuss it. We saw a big plunge. I got a lot of phone calls on Friday asking, am I getting in? I said, no, this can go under 20. It fell close to 20. It is AI. Listen, Hollis has got it right. It's AI generated here. So we got more than a 20% decline. We have the company's co-founder charged with selling billions of dollars worth of servers containing sanctioned NVIDIA hardware to China. There's always been rumors over the past year that this was happening to some degree, that China was getting their hands on equipment that had sanctions on them. It wasn't proven until the other day now. We had a board member leave. So I have no idea what's going to happen with the compliance failure, but it is putting every part of the AI supply chain under a regulatory microscope when it comes to SMCI and maybe other international companies. I'm staying away from this. This is not the accounting situation from last year where I was able to ask 2 accountants their opinion on the matter and get a little bit of clarity of what was going on and make an educated decision that it's something that I wanted to take a chance on. This is something completely different. I have no idea if Jensen is going to stop doing business with them. I have no idea if this doesn't matter and NVIDIA continues to do business with them, if they end up having no sanctions against them. This is something where I can't handicap, therefore I'm staying away from it. This could go over 30 real quick. This could reverse. This could continue going down further. It's not a game I want to play. I have no interest in it. And Chels could be right. Monday might be a great dip buy. We're going to find out on the future show with Amit what the futures are looking like. We still don't have an all clear sign overseas. Oil, let's see where it is right now. So we have Brent at 112.19, and we have crude, which is WTI, at 98.23. Both very high. And this is not what we want to see at all. Year to date, Brent is up 84%. Crude WTI is up 71%. Year over year, 55% and 44%. Not what we want to say. This is making the inflation story even more front and center. Dookie Pie, do you think Strait stays closed and Trump bombs the power plants? Here's my question with the whole situation overseas. Who the hell is the U.S. negotiating with? I mean, do we really think that Iran's government is intact? That's the question that I have. Who the hell are they negotiating with? Because if you have a fractured government and really no control over the region, you can negotiate all you want, but is there any sort of continuity, or is there any way that whoever they're negotiating with can accurately say none of the rebel tribes are going to bomb any of the ships? I have no idea. No clue. The other problem that we have, Micron's triple beat scares the hell out of me. The fact that Micron couldn't catch a bid, and the fact that Micron blew earnings out of the water, they did NVIDIA, blew earnings out of the water and went down. That's not what you want. This is a completely risk-off scenario. Everybody's worried about inflation fears. Everybody's worried about instability. People are worried about the cost of goods going up. When you have oil at these prices, transportation costs, input costs, they all go up. This is prime growing season. Fertilizer cost is up. This is all going to get passed on to the consumer. This is not a recipe to cut rates, even though personally, I don't think it matters whether it's 3 or 4% inflation. I think it's more important to have a stable interest rate that is indicative of business. I think that it is much more important to make sure businesses are able to borrow, entrepreneurs are able to start businesses, and small businesses are able to tap the debt markets to grow. I care much more about the labor market than I do inflation. I know that that is not a, should we say, popular way to look at things, but an extra $3 or $4 isn't stopping people from buying goods. So if it's between that and more Americans having jobs, especially in an environment where companies are doing more RIFs due to technological advances, I think it's really important that we make sure we have a interest rate that can spur growth. So we'll see what happens. I don't think the strait's going to be open tomorrow. We have a couple of things that are going on. You got Trump saying that he's going to deploy ICE agents to airports. You got him saying that we're going to start bombing critical infrastructure when it comes to utilities. There he is. Mr. Matt, how are you?
Steven,
I thought you meant just go for 15 minutes, not start at 3:15.
It's okay.
I apologize.
I didn't want to wait. I didn't have the time yet to do my homework, and I didn't want to
All good?
come on unprepared and then get
All good.
ridiculed by being unprepared. But here we are instead.
Here we are. So we also got PPI. So that is also sparking inflation fears as core jumped 0.5%. The consensus was 0.3%. We have the 10-year going through the 4.3% level. Jobless claims fell to 250,000, but house data disappointed. The Philadelphia Fed index surged to 18.1. This is going to be an interesting week, and we need oil under 75. Charles, you're right. At least Maddie does his homework. Who says I didn't do mine? Who says I didn't do mine? I'm not bullish, Mosaic. I'm not getting in the fertilizer game at all. This is not something. Yes, Dookie, we need oil. I didn't say oil is going to be under 75 this week. I'm saying we need oil under 75. We do not want oil in the high 90s. Oil under 75 becomes a much less desperate measure for the Fed to consider even hiking rates. We don't want the Fed in a situation where they're discussing hiking rates. And CME Group, I believe, has that in there somewhere. So I'll pull that up right now.
$75 to 80 is a really good middle ground price for everybody.
This is, and everyone in the chat, this is not bullish. This is December 2026. This is 9 months away. And you have now being priced in over a 30% chance we're getting a rate hike. That is drastically different than where we were at the beginning of the year with 2 to 3 cuts. There's over a 25% chance we get a 25 bip hike. There's a 4.9% chance we get 2 hikes this year. You have real hawks on the Fed right now, and there are very serious discussions probably happening. We need oil under 75 to make this change. We do not want to see this at all. We go out to the end of 2027. This has not looked like this in quite some time. Every single percentage was under where we are today 3 months ago, looking at 2 years. The fact that we're even in this situation where there are Fed members that believe that we are going to have to hike over the next 2 years tells you everything about this situation. Nobody has any confidence this is getting solved anytime soon, and nobody has any confidence that oil prices are going to get regulated back down to the 60 to 70 level anytime soon.
I mean, I think the reality of the situation is, Steve, is the market's doing rather well. I mean, I know that people are freaking out that the market's down 8%, but overall, EPS is up for a lot of companies across the board. You're continuing to see innovation in AI and a lot of technology companies. You're seeing manufacturing come back to the United States in a way we haven't seen probably since World War II. And to be very frank, I think the economy is running on a steady beat. So as much as we are addicted to that zero interest rate policy, I think the reality is the economy is good. I think the black eye that you could potentially say in this whole situation is maybe mortgages being down and real estate kind of being at a stall here, because you're seeing some of these larger properties sitting for longer than expected and you're seeing prices get cut. But I mean, in reality, the market's doing really well. So to expect that we would have these cuts to continue to add fuel to the fire when we don't necessarily need it is kind of asinine. And I think in reality, I think it's a tough pill to swallow. As much as I would love cheaper debt, in reality, I think it's better for the economy to get used to normal interest rates. What we were dealing with over the past 15 years was atypical and something that was out of the realm that was necessary to grant us and dig us out of the great financial crisis. And to be fair, the economy is on a much better footing now. I would hate us to see, get so extreme to have our addiction to debt or cheap debt really put us in a situation where we don't need it. And so to me, I'd much rather a situation where rates stay higher for longer, because I think it's necessary to kind of keep the economy at bay to an extent and inflation at bay. I think cutting here with everything going well, I think we'll only just add fuel to the fire and you'll see inflation get out of control.
I agree with some of what you said. The market's
that's going to be a very unpopular opinion because everyone's going to be emotional and want cheap debt. But the reality of the situation is the economy is much better situation than it has been in quite some time.
So the market is doing well. People who are in individual stocks are feeling it a lot more than the S&P. The reality of the situation is the S&P is up almost 15% over the past year. And if you're in an S&P index fund, you're down 5% year to date. There's a lot of stocks that are down 20, 30, 40%. So if you're in an S&P 500 index fund, you're not really feeling it. And this is very healthy. You don't want to see a market go straight up. And this looks like a market that is going to rebound. It always rebounds. It's just a matter of when and how much more it draws down before the rebound happens. The problem with the debt situation is that corporate debt rolls over on a 5 to 10 year band. And when you were borrowing in 2021, not you, but businesses, they were borrowing at some of the cheapest levels we've ever seen. And now that debt is terming. Anything that's on a 5-year term, they're having to pay so much more that it is disrupting their profit models, and that could cause more layoffs. That's the first negative. Second negative in the situation is national debt. If we're able to get interest rates down and issue more debt at lower rates, we can significantly cut payments, which is huge on a national level. That helps the national budget and everything else. I hate the idea of tinkering with rates. I personally would want rates at 2.5% indefinitely unless something breaks. We shouldn't be scared and rolling over because inflation goes up by 1 percentage point. Spending $100 this year and $101 next year doesn't matter. It's just, I think it's crazy. Like 1%.
I think 2.5 to 4% is reasonable, and it's better than where we've been in the past. I think I don't necessarily disagree that the debt needs to come down, but I think the debt is more of a situation of just broad corruption within the United States and people, the usury that's going on, than than really the actual debt itself. I think that you can create a surplus if you just get rid of so much of the corruption that is being held at the federal level. And to me, I wouldn't put it past there being $1.5 trillion that could easily be removed if everything was as most efficient as possible. I know that's impossible, but there's millions of dollars spent on people that are just driving around that don't actually do anything because they're able to live off the government. People getting couples getting $120,000 a year on disability when they're perfectly capable to be able to work. I think there needs to be more stringentness on. I don't know if that's a word, but I think we need to be more stringent about drug testing. We need to be more stringent around capability and actual disability. I think it's so much easier these days than people give credit. And I'm all for social programs, right? Like, I'm not saying cut social programs, but I'm saying like it's super easy for people to be able to go on the dole, and they're getting paid more than the average American. So then if you think about that, you'll need 5, 6, 7 people working to be able to support one of these people. But unfortunately, it's not even more like 5, 6, 7 people. I mean, you're talking about likely 20 to 30% of the economy being on the dole. And that statistic is going to be wrong, but it's a larger percentage than people truly give credit for. If people are thinking about using unemployment numbers can also be skewed as well. So I think it's after 26 months or something like that, people roll off of the unemployment line and they're not necessarily counted in that number anymore. And for honesty, like, I think people can easily do that for 26 months, wait till they get rolled off of the unemployment number, and then apply for something else that gives them a stipend for being off of the payroll. Like, I honestly think that there's a revolution that needs to happen. We threw tea in a harbor in the 1700s over a small percentage of taxes, and here we are getting absolutely destroyed, and our money being taken from us on a quarterly, if not monthly, if not paycheck basis, and we're just sitting here taking it. I think we need to push back, Steve.
You're talking to the wrong person. And I know you want me to go off on this because I have very strong feelings about taxation. I got very strong feelings about where the money goes to. I don't want to turn this into a political thing. I try really not to be political, but I agree with a lot of what you said, considering that the tax structure in this country is crazy, and where the money gets spent, I have no idea. I have no doubt that if we were to do an audit, we would find things that truly do not make sense. And the reality is that's not going to happen anytime soon. The quicker fix is to fix the things that we can fix rather than overhauling the entire system. The chances and the probability of that happening are slim. Absolutely slim.
Yeah, sorry for getting too political.
Funny.
I'll reel it back in. Yeah, what did you go to the barber today, Steve? Looking fresh?
No, this is how my hair dries.
Looking fresh, Steven, as always.
It's how my hair dries. I'm actually
sorry for going on my Matt Money 2028 political rant. Let's get back to the stock market. I'm buying, Steve. I'm a buyer this week. I'm excited.
Ooh, what did you buy? Okay, what did you buy?
Well, not in the small portfolio. Well, I did get
I want to hear it. Oh, I got something to show you. Hold on.
Show me, Steve. Oh.
Got something to show you.
He has to turn off the camera because he doesn't want us screenshotting his booty. Sorry. I turned off my camera briefly to put in eye drops, and I don't know if you guys know this, but your ears, nose, and throat are all connected. I put in eye drops, and this is like some strong antibiotic. It just rolled through my tear duct into my throat. Tastes horrible. Sorry. Steve, are you not wearing pants?
So, I went to go get milk this morning.
Dodges the question.
All right, as I do on Sundays.
How chilly is it?
It was. I thought it was going to be a little warmer. Now,
there you go.
The milk dealer says to me, "You got to try something."
Don't do this, Steve.
I'm like, all right, what do I got to try? So, maple milk.
I know that's good.
I've never had it. I've been
Oh, he's holding
tempted.
off.
I've been tempted. And I was like, I'm going to wait for the stream. Maple milk. I am so ready to try this. Maple milk. What do you think, Matt? I mean, two of my favorite things, maple syrup and milk. Oh my God.
Dude, I can't eat pancakes. So obviously when I was I'm still massive, right? But
Oh my God.
Steve, give us the sip by sip.
Oh my God.
Give us the sip by sip, Steve.
Whoa. That's life changing. Like that's legitimately
Other than
freaking
the
life
blueberry
changing.
pomegranate?
Whoa. And he said they only make this once a year.
I mean, this is the perfect time, right? The de-thawing.
Ooh.
Anybody that knows maple syrup, you think you have to like, it's what, 10 gallons of syrup water for every gallon you get, Steve? Something crazy. It's like a 5 or 10% ratio. You have to boil it down.
All I'm gonna say is I was not expecting how good that just tasted. And when I love blueberry pancakes with hot maple syrup on top and a glass of milk.
Why are you doing that? You know I haven't eaten yet. You know I haven't
This
eaten
is
yet.
incredible.
That I one of my favorite things that I started to do on a tradition was take myself on a mandate on Saturdays or Sundays. And this is before I was dieting. So like a year, 18 months ago. And I would get like I don't know what 3-stack is. Is that a medium stack? I don't know what the hell it is, but I got a 3-stack of pancakes, and I would just syrup it up, Steve. I miss that flavor.
Well, I'm going to send Amit a picture of the maple milk.
Steve, you're inspiring me. Maybe I buy some land in New Hampshire and just start a syrup house.
Whew. Now that's some fire. That's some good stuff right there. Anyway, all right. What did you buy this week?
As always, Steve. Rocket Lab, Palantir, Symbotic. What else? Dutch Brothers, some Bitcoin, some Ethereum. Which reminds me, I need to go into my. Oh, by the way, Steve, your credit must suck because I also got the Robinhood Gold card.
Actually,
yesterday.
I'm now off the wait list. So also,
Are you?
Yeah.
Can I say something that's been really strange and bothering me? So every time there's like this wave of times, like I've signed up for the card probably 3 or 4 times. You got to apply, Steve. I don't know what it is. I've applied to be on the wait list several times. I get taken off the wait list. Is this something that happens to people? Because I've applied to be on the wait list probably 3 or 4 times. And so literally like 2 weeks ago, I noticed I wasn't on the wait list again. Surprisingly, I don't know why. And I applied again. And now obviously 2 weeks later, but like, I remember when the gold card first came out, I applied. And then it was like, I don't know, when people finally started getting them, I looked again, I was off the wait list. I didn't understand why, because I'd already applied. I put myself back on the wait list. I checked 2 weeks ago, I was off the wait list again. I reapplied to be back on the wait list. Now, obviously, I got the application, but very strange. There's a really good question in the chat. Sorry, I know we were talking about food and your delicious maple milk.
I mean, listen, Ronnie Brooks special edition of 100% sourced pure Hudson Valley maple syrup added to their whole milk is sure to get you to a happy place. And I can promise you, I'm in that happy place.
Hudson Valley. Wow, that's probably an old money name. I'd be curious. I'm gonna look that up after the show. But somebody asked a really good question. Matt, you bought a stock wanting to hold for 5 to 10 years. I understand this. Magically, I've gotten to the same place. Your price target can move, right? So Rocket Lab's a prime example for this for me, right? Your price target can move where you don't necessarily know. The company can be more mature. The company can come up with new revenue streams. The company can show you that the total addressable market is much bigger than expected. The not just the company, but the whole market can increase in total addressable market. You could be wrong about your price target. So I'm not just saying that if your company gets to a price target, don't sell, but always think retrospectively, like write it down. What are the assumptions that I had 5 years ago or 2, 3 years ago about the company? Why did I think it was going to get to that market cap? And it's the same thing with when I got into Palantir back in 2020. I got into Palantir back in 2020 based off of what I knew about the company back then, which was being somebody that uses the software and being somebody that knew slightly about the other corporate endeavors that were going on. But obviously, it wasn't as public as it was. Then he started getting more integrated with the US government and military contracts, getting involved in Ukraine, getting involved in Israel after October 7th, getting involved in a lot of these other ideas and opportunities like Golden Dome and all these things. And the total addressable market continues to grow. So when I first invested in Palantir, it was very risky. The company wasn't profitable. Nobody knew what the free cash flow margins would look like. And now you are 6 years beyond that after the S1 has kind of come out, and you're in a completely different place. It's okay to move what your price target is. What I don't want you to do is say, oh, no, everything's the same. All my estimates were right. It all looks the same. But just because it got here a couple years earlier, I'm just going to continue to hold. Always think about where you are today, what price target you want to get to. And this is how I look at it, right? And this is not financial advice. I think Steve already probably went over that. But always just look at where am I at today to where I think the company can go. And is that likely to be at the S&P 500, right? Because if it's not, why would you have the single stock risk if you could spread that amongst 500 profitable companies that are continuously interchanged depending on the performance of them? So the way I like to look at it is if you see something that has like a 15 to 16, 20% compound annual growth rate potential, and you feel like the risks are quantifiable to an extent, and you feel like it's not something that's super risky, keep in mind that's up for interpretation depending on your own tolerances. Then it's like, okay, well, yeah, keeping my money in something that's 15 to 20% is probably pretty good, considering 8 to 10% is maybe what the S&P will get over a 10, 20-year period. So I'm willing to take that single stock risk. Now, if it's something where it's like, I might get a 10, 11% compound annual growth rate from here in the next 5 to 10 years, depending on your horizons, etc. It's like, well, then why take the risk, right? Like, unless you honestly think that there's a massive upside on that, like a 20, 30% compound annual growth rate, then this is part of the reason why I came out with probably, is so that you can kind of understand, like, where are you sitting in terms of compound annual growth rate? And I'm not saying it's going to be linear, right? There's going to be stair steps. Like Venture Global will go through stair steps. Next decade, we'll go through stair steps. As risks are removed from the table or things are quantified and cash flow starts to come in, things will start to de-lever or de-risk. And so that's the reason why I came up with probably. It's because there's no one size fits all. Certain risks can be realized. Certain things can happen. Interest rates can go up. And then next thing you know, Venture Global now has hundreds of millions of dollars of interest payments that they're going to have to refinance when 2027, 2028, 2030, all these things that they had on the books that they have to do as construction loans now have to be long-term debt. That's say 5-10 year debt bonds that they have to go out to the market and issue. Instead of issuing them at 6%, they might have to issue them at 8%. That's hundreds of millions of dollars that have now impacted the net income in the short term. So all these small things, you can't just have a static view and sit there. It's always something that you're going to have to monitor and say, how is this adjusting? How is this headline adjusting what my thesis is? How is this particular contract impacting it? And it might not, it might have a very low importance. It might just say, okay, par for the course, we're going to continue for that. But that is something that you need to do in order to be an appropriate money manager for yourself. And if you don't want to do that or have the time, the S&P 500 is there for you. So I don't know. I appreciate that question. It's a very good question because I've been in that situation before. And I don't just raise price targets to raise price targets. I raise price targets because I find out more about the company. And I don't always raise price targets, right? Like I have times where I'm like, you know what, this isn't beneficial enough. Like Nubank, great company. I think will continue to do well. SoFi, great company. I think will continue to do well. But at the $30 price target, I was sitting there like, would this actually beat the S&P 500 over the next 5 to 10 years? And it was tough. Now back at 16, 17, I think it has a slight edge over the S&P 500 over the next 5 to 10 years. But you always have to be doing that evaluation as to what you're doing. Like Google, on the borderline of me just being like, you know what, I love my Google shares, but is it actually going to outpace the S&P 500 from here? Like, do I want to sell Google? No, but at the same time, do I think the S&P 500 at a $300, $400 price target, and Google with the next 6 months, I might actually have to sell it and put it into the S&P. Like you have to always have that dynamic view of what's going on in your portfolio. So, Steve, of course, you have a difference of opinion. Maybe you do, maybe you don't. But I saw that question and I was like, that's too good to skip. That's a phenomenal question.
I think there's a lot of companies at S&P I would never own in my life. That's a good and bad thing. It helps counterbalance a lot. I do think that you can do better than the S&P, but I do think it's difficult. I think people romanticize investing in individual equities, and a lot of times they don't beat the S&P over time. A lot of people did not get on board with NVIDIA, including myself, until it was already a trillion-dollar company. A lot of people did not get on board with Microsoft or with Meta or with any of these companies that if you're in the S&P, you got a large amount of the run embedded in it. So there's an argument to be made about the S&P. I think it's a great tool for most investors, if not all investors. I personally have a good amount of money in it. Plan on putting more money in it. I think it's a great equalizer to investors that are taking risk and investing in individual equities, because you know what? It can always be there to even out a portfolio. So I'm a big fan of it. I don't know if I would exit Alphabet. I haven't, so I can't say that I would, but there are definitely things I would consider getting out of and throwing that capital in the S&P, or even an S&P growth fund such as SPYG, which is, I think, 130 or 140 companies, and it strips away the companies I'm probably not as interested in that you can find in the S&P. I mean, I do own SPYJ as an individual ETF. I think it's a great ETF. Owned it for a long time.
I don't know SPYG, but I think I've talked to you about it, and I don't think it's too aggressive. The SPY eyes and the QQQIs, I think, are a little bit more aggressive. I don't know if that's sort of sustainable long term, but I think SPYG, if I remember correctly, do they do the cover calls, or is it completely different? It's more growth.
It's just straight equity. Yeah.
Okay. Yeah.
It's 141 holdings. I'm going to bring up the portfolio right now, the top 10. So the top 10 look different than S&P 500 index fund. It's NVIDIA, Microsoft, Apple, Alphabet, Broadcom, Meta, Amazon, Berkshire, Lilly. I mean, similar, but a lot more weighted toward these. I like it. It's more condensed. Yeah. And when you have 141 instead of 500, it's probably more geared to stuff that I would be purchasing. I happen to like it.
No, I think SPYG is not bad.
And when you look at the performance of SPYG versus SPY, I don't know why it does that. It doesn't update. Let me bring it back up. SPYG is up 79% in the past 5 years, whereas SPY is up 67%. So if you think tech is going to continue to dominate the market over the next 5 to 10 years, you may be able to squeak out a little bit more alpha. Is it going to decline harder than SPY during periods of uncertainty? Yes, we see it in the chart. But it's also going to outperform when the market's good, which has outpaced everything else. So I'm a fan of it.
Yeah, I don't hate those.
No call
Look, and
options.
it depends.
or
You
anything.
could want to do, what is it, SPY D, Steve? Is that the dividend focused one?
I got that too.
Which one is that? I'm trying to remember.
That's the
And
dividend one.
it has a little bit higher of a yield, but it underperforms in terms of capital appreciation.
It underperforms by a lot. I mean, it's part of the income portfolio. I mean, it's got a 4.5%.
But it always goes back to what does the individual want, right? Maybe they have a couple million, maybe they've been a diligent saver, and now they just want something that's a little bit less volatile and gives a little bit of income. They don't want to have to worry about selling every couple months to fund their rent or their mortgage payments or to go on a vacation. They just want that dividend to come in. And the 1.3% dividend yield from SPY just isn't cutting it. I think SPY D gets it closer to 2%, something like that. I'm trying to remember. Higher?
4.38.
What?
Yeah.
How many of the holdings of S&P does it have? I have to look into that one.
84. But Verizon, Edison, AES, AT&T, Kinder Morgan, PepsiCo, Iron Mountain, it's all the big ones.
Yeah, it's the big boys. Okay. I thought it was more. What's the opposite of SPY G then? It's not SPY D. It can't be.
I mean, the opposite of growth is dividends, or you go value play, SPYV.
SPYV is what I'm thinking. Okay. Sorry, I was thinking SPYV, which I think is closer to a 2.5%. I don't think it was close to 4.
The fact that Amazon is a value play is disgusting.
Steven. So what's the dividend on this bad boy?
The fact that Tesla is a dividend play is disgusting. How is that? Like, how is Tesla a value play, please?
Well, I'm curious. I mean, if you just look at it, it's 1.5%, 1.3%. I think it's maybe my eyes are playing trick. It's 1.5% compared to whatever the normal SPY is, which is probably what 2.5%. So it is trimming it, I assume.
And the yield on this is 1.8%.
Yeah, so that's what I was more so thinking of: SPY V versus SPY D.
I own this one also. I like the spiders. They make some really good funds. I have them in a separate portfolio. SPEM is the only one that I have for emerging markets. It's not something I like spending time on, so I just buy the basket.
Yeah, I just realized one of the things I need to do on my site is have a better comparison tool. That would be good.
Looks like
I do a lot of comparison. What's that?
You're gonna be vibe coding the night away.
That was why I was up a little late today, Steve. It's why you're getting messages from me at 4 or 5 a.m.
Is that why?
Steven, money doesn't sleep. I really want this thing to be useful for people. I really do.
Money doesn't sleep and money
I'm trying to get it, AdSense so that it can be free for people. Then I want to advertise it, send it out to the masses.
You know what I just realized? I didn't put any bets. I only have one bet open today.
Steven.
I only have one bet in. And I think I got to lay some money on freaking St. John's. Probably not the smartest idea. But they're not playing today? I thought they were. Why did I think St. John's was playing today? Anyway.
So Steven, should we get into the small portfolio challenge?
Yeah. So you can laugh at me? Sure.
Laugh. I'm not going to laugh.
Absolutely.
If it makes you feel any better, I'm down from last week.
You're a good role model, Matt. All right. What did I do this week? So I bought back my put on cash secured put on Zeta and my cover calls on BMNR, and I rolled them out. Generated about 46 bucks in option income. I got a dividend from QQQI. Everything else is pretty much the same. Down 9.59%. Why is it looking well? There we go. Didn't do anything big, just rolled out those two. I still have just over 1,000 in cash, trying to decide what to do with it. And I think that this is going to be fine. The market's down. I'm not underperforming the market by that much, maybe just a couple of percent. And look, this is what happens when you're not able to pay attention. You should not be writing cash secured puts. If you can't pay attention, I got stuff put on me 3 days in advance because I wasn't paying attention. It just kind of happened and it got away from me and I didn't realize where the price was. Lesson learned. I will work my way out of the situation within the next 2 months, I believe, if not sooner.
I don't hate it, Steve.
So let's look at Matt. You updated yours?
Yeah, it's all updated.
Okay. So Matt is up 15.4%. Matt is decimating the market. What do you have? Is you have over $2,000 in premiums generated. What do you have open right now?
Well, Next Decade was one, if you want to scroll down. So I did get assigned on Serve Robotics. So that ended up being an equity position. So row 66. So that was one. I'll actually have to calculate the total profit. It might end up being a loss on that one overall. I'll have to double check and go through all of the roles and everything associated with that. But I did get assigned that. So 2 contracts, $12 a piece, so $2,400, and currently the value of that is only like $1,700, $1,800. So I'm down pretty substantially on that total position, but I did capture some of that premium in there, so it's not as large of a hit. But the thing that's nice is that Next Decade boy, that was a $6 cash secured put that I was thinking about continuing to roll for quite some time. Anybody that's been following, if you look at the spark line there that's in column D, you can see the large spike up over the past several days. The stock has actually gone, I think, closer to like $7-8. And so the value of this contract, as you can see, has pretty much been realized. I think there's only $52 worth of remaining premium of the initial 337. So I think I'm up like, what does it say here? Sorry, let me just make sure I don't share everything here. It is up 85%. So I'll probably close that out if I'm able to, because otherwise I'm just locking up for I'm locking up $2,400 for $52, and it just doesn't make sense when you've realized 80 something percent. And I don't want to wait. This is a learning point for everybody. I've made 85%. I want to lock in that 85% if I can. And I'm not just going to sit around and wait for that additional 15% of that contract to go to 100%, because I could probably find something else with that $2,400 that I could write options on that would generate me and restart my clock. And that's most important. So it's like, this is something I try to explain to people quite a bit, and it takes some time and like building the muscle and trying to understand, because I try to tell people when covered calls happen, it's like, dude, if like, let's just say you write a covered call and it goes in your favor for the covered call. I mean, that obviously means against you for the stock. But let's just say you're able to get like a 40% return in a day because the stock just has a crap sort of opening or something like that. Just buy the damn contract back, because if the stock goes back up again in a day or two, back to where it was, you could rewrite the contract and be able to have captured that 40% and then rewrite it and almost be able to capture an additional amount of theta decay. That's the beauty of being a seller of options rather than a buyer of options. Now, of course, you have to do what's right for you and your portfolio and your objectives. But the beauty about selling options is that you have a treadmill that's always working with you, not against you, because you have theta decay that's happening all the time. Time is going to happen no matter what. And so that's the beauty of it, versus if you're buying options, time is always working against you. So that's part of the reason why I love selling options, is because you always kind of have that time decay that's kind of on your side. It's almost like being the house, if that makes sense. But anyway, so that's two sort of thoughts that I have. Serve obviously not the result that we want. The stock is below $9. Um, but I think I will. I think I'll when I now that I have those in the portfolio, I'll probably write at the $12 range for serve. And if that's the case, then I might be able to claw back. And if it does eventually go back to $12, then I'll have the opportunity to kind of capture all that premium that was initially there. Like a May $12 contract is 21 cents. So I could generate, maybe I'll do weeklies instead. I don't really know. But if I'm able to do like a weekly and capture, $5 or $10 a week, I'll be able to claw back some of it. And if it does go back to 12, then Bob's my uncle.
Did you say then Bob's your uncle?
I don't have an uncle named Bob, but I do have a cousin named Bob.
There you go.
It's a good guy.
Good role model.
Just moved to Austin. I need to go visit him.
Oh, pretty close to you. Well, not too close. But.
Now I have some friends and family nearby. Well, family. I've always had some friends here.
Good role model.
So yeah, up 15%, down from last week. I think it was like 17, 18% last week. And that I think is mostly from realizing the impact from server robotics. Partly offset by next decade going up.
So we got some developments. Iran is threatening to retaliate against Gulf energy and water after the Trump ultimatum. We'll see what happens overnight. This may, in all seriousness, this may be escalating beyond our control. As I said before Matt got on, I have no idea who the hell they're negotiating with, because who the hell's in control of Iran right now?
Yeah, I think that's a problem.
I mean, there's, to my knowledge, and I have pretty much limited knowledge about this, how can whatever government that they are, I got to turn this off. I can't look at these pictures. They're too depressing, seeing these little kids and stuff. It's too depressing. But who the hell are they negotiating with? You can't tell me that they have any power structure there that is in control of all the rebels. You can't, I don't know how they can guarantee ships won't be fired upon. I don't get it.
Yeah, no, I mean, especially if you don't have good line of communication, people falling in line. I mean, if the leader changes every day, like this is a prime example. If Donald Trump, be with them or against them, we have the same. But say we were being invaded, and it went from Donald Trump to JD Vance to then I forget who the Speaker of the House is. And it just goes down the chain of command because unfortunately they just keep getting eliminated. It's like, well, the first person might have said, retaliate. The other person might say, let's recoup and figure it out. But you're getting mixed messages because every day somebody else is coming into power. And then also, are their lines of communication solid enough, like you stated, Steve, to believe whoever they hear is in power, right? And is there a power struggle within that? I mean, maybe they're very well organized. Maybe they have something that's very cleanly organized, but I think with being impacted as such they have, I think it's difficult to keep that line of communication as clear and coherent. So it's difficult to know. And you're not just challenging a nation, you're challenging a religious belief at that point. Because it's not a government. The government in Iran is not a government that was installed with like a separation of church and state, right? It's a religious sect that has overtaken the government there. And so an attack on them is an attack on their religion to an extent because they are their religion. So I don't know. It's a difficult situation. All bets are kind of off when you bring religion into it.
Ori, thank you very much. Do you think Taco is coming? No, I don't. And not at all. Here's why. You can walk back words, you can walk back tariffs, you can walk back disagreements. You cannot walk back dropping bombs on infrastructure. You cannot walk back what has been done. There's nothing to chicken out from. We've already decimated areas of the country. There's nothing to walk back. You can't walk that back. I mean,
Stuff.
if we end up, let's just play it out. If we left tomorrow, that's not chickening out. Like, we've already done the damage. So I think that this is unfortunately going to be like this for a little bit. I don't know how, Dookie, I don't know how this comes to an end because we have no idea who they're negotiating with. That's the problem. We have no idea what their government structure is like. We have no idea if over the next 3 to 6 months there's going to be an uprising of the people. We have no idea what's going to happen. And Saudi Arabia saying that Iran needs to wisen up. I mean, okay, but who are they saying that to? You know, who is the negotiators from Iran at this point? And do they truly have the power to call the shots? I don't know.
The thing that I'm confused about, Steve, was like, did they initially think that with elimination of the Iranian regime, religious regime, would allow the Persians that were protesting to eventually take over, and then they would say, okay, let's hold a general election to which they could select who they want to put forward? Like, what was the thought process behind this? Or did they know? I mean, it was kind of like why people never wanted to attack Iraq, and same thing with Cuba when Fidel Castro was. It's like, you kill Fidel, then they have the next person in line that's just going to take over. So it's like, did they have this in mind? I mean, I don't know, but I have seen some interesting thoughts around the testing of missiles having up to 4,000-mile capability from Iran. Whether or not that's true or whether that was propaganda, I don't know, but it basically shows that within 4,000 miles, you have Rome, you have a lot of European cities in the southeastern part of Europe that could be targeted. And if that is true, then it could have given, more reason for the potential impact that we're kind of seeing in the onslaught of war that we're seeing. I mean, I still don't know how to digest all this, and I'm no expert, and but I think it I don't want to say it gives more reason, because I don't think war is ever a good thing, but I don't know. It just makes it seem, I think a lot of people were like, there was never going to be any threats, etc. It's like, well, technically you do, but then at the same time, it's just like, well, why are we okay with having some countries have, nuclear capability? And I guess maybe it's more along the lines of having the appropriate structures in place and conversations with the United Nations, that there's some sort of agreement, and then I guess if you're not willing to come to the table and have those agreements, then that's why we're in the situation we are today. I don't know.
Nobody's going to be able to handicap this, and we are just going to have to wait and see how it plays out. The oil markets are telling us everything that we need to know. They're not coming down. That's a problem. So I'm not going to sit here and say that, oh, things are going to be better in a couple of days. I have no idea. I think we just need to invest through it. In the long run, this will be a blip in time. Whether
Yes.
oil is over 90 for a week, a month, or 6 months, eventually oil will go down. Eventually the markets will rebound. It's just a matter, are you a buyer during that period or not? I mean, that's really the situation. I'm a buyer, and I bought more NVIDIA. I think NVIDIA is too low. If NVIDIA keeps going down, I'll buy more. I'm going to buy more S&P, probably going to buy more Amazon. I don't know when this is going to end. This is not like the Liberation Day scare. This is not something where I am confident that we are at a bottom. I think that we need another week to see how this unfolds. And Dookie, I don't know who the hell they're negotiating a ceasefire with. That's the problem. Like, who are they negotiating with? So I'm just going to focus on corporate earnings. I'm trying to game out which companies, this impacts a lot of companies negatively, but when this breaks, who are the real winners in this, and who's going to shoot up? That's the way I'm looking at this.
The way I look at this, Steve, is regardless, you're still seeing onshoring of manufacturing in the United States. You're still seeing technology continue, whether that's defense tech or whether that's just normal technology, and what it's being used for. You're not going to stop robotics. You're not going to stop artificial intelligence because of this war. And I hate to say it, but it's like, I think the market's going to be fine. I agree that it's going to be a blip when you look at it in a 10, 15-year time scale. We're not even down 10%. And to be fair, like, it's not even that oil infrastructure has been impacted all too much. The only thing that's been disrupted is really the Strait of Hormuz. And so if that is able to kind of come back, I wouldn't be surprised if oil goes back to $80 a barrel very quickly within the matter of a couple weeks. Now, of course, you're still going to have this run to energy prices being elevated, specifically from the LNG perspective, because right now, Japan and Korea and a lot of these other Eastern nations, where it's beginning to be starting their fall, almost their winter, they don't have the type of supply, underground storage that say Europe does. And so a lot of that is just in time delivery that might be 2 to 3 weeks out. So if you disrupt that of course is going to impact, their almost immediate next week or 2 weeks from now sort of light bill. And so that, I think, is what's going to be more dire if this continues, is that impact. But I think from the United States perspective, we have plenty of supply personally. In the United States, we have a lot of our energy coming from Canada. We have a lot of LNG, or not just LNG. We don't need LNG in the US. We have lots of just natural gas in general, that we have so much so that we're exporting a large percentage of it. So I don't know. To me, I think from an energy security perspective, the United States is okay. We don't have to worry about turning the lights on or off, but obviously that could have an impact to prices. Luckily, I think electricity prices won't be impacted as much, because a lot of the nation runs off of natural gas, and natural gas Henry Hub prices here in the U.S. have remained below $3.50 in most places. So I think electric prices will be okay. I think that the pump, though, when you're talking about oil and petroleum products, that I think is going to see some elevation unless we see the Strait of Hormuz kind of resolve. I'm still cautiously optimistic that we're on the second half of this thing, but I have no idea about war. So I thought the Ukraine conflict would have ended many, many moons ago, and here we are, almost literally 4 years on. So believe it or not. So it's who knows? These things can sometimes just end up in a quagmire where you're in skirmishes for years.
That's a great point. I mean, who would have thought that the Ukraine-Russia conflict would still be going on? So
4 years.
The difference is 20% of the global oil supply wasn't flowing through there. That's the difference compared to this. Unfortunately, part of this is about energy, and part of it is about nukes. Part of it's about other stuff.
Well, yes and no, Steve. While it wasn't necessarily oil per se, Russia is the second largest oil producer in the world at this point. They might be third. I'm trying to remember if they've overtaken Saudi Arabia.
No, they haven't.
But what they did supply a lot of Europe was 50% of their natural gas.
Well, that's because Germany decided to only go pipelines with Russia and get rid of their facilities.
and Poland and Ukraine. So I mean that is obviously with the capacity increases that we've observed here in the United States been offset by the United States, and now I believe it's only a fifth rather than a half of gas, and eventually by the end of the year or within the next 18 months, it'll eventually go to zero that Russia supplies Europe just based off the current sanctions. But and that's obviously going to be almost fully offset by the increase in capacity from Western Africa and the United States Gulf Coast. But I wouldn't say that the supply chains weren't disrupted. I mean, there was a reason why oil went to $120 a barrel back in 2022. There was definitely supply chains massively disrupted, and that did cause some short-term scares, and it remained oil to be elevated for quite some time, to the point where just 18 months ago, people were still arguing whether or not we were getting $100 a barrel on a regular basis, which I thought no, because supply chains have kind of been rerouted, and the oil supply was just way much more than the demand, and people were stockpiling again in terms of inventories, etc. But I don't know. I still think the world is a flood with oil. If we're able to get the Strait of Hormuz thing figured out, that's a big if. But if we are, I still believe that oil will come down below 100 very, very quickly.
We get the Strait of Hormuz open. And let's be very clear. It's not shut. What is happening is the six largest insurance companies are not insuring vessels. So no vessels want to move through there because they're being fired upon. It's not technically shut. Now, if we can actually get this situation alleviated, I agree with Matt. I think oil goes to 80 real quick. Like real quick.
Steve, can we talk about something more? This is going to sound really mean. It's a joke, guys. Can we talk about something more important?
Sure.
How about that thumbnail, Steve?
It was pretty epic.
Did people on your channel see it? Did you start with it?
I can bring it up. Hold on.
And I'm curious what their thoughts are about the first one or the second one. And then I want them to see the original photo.
I'm just making sure that if I bring this up, your phone number is not going to be shared.
Yeah, I appreciate that.
Your phone number is not going to be shared.
Okay. I got more people texting me how they find my number. I don't know.
Yeah, I don't see your phone number, so I'm pretty sure we're good.
Okay, just go for it. I can always change my number if it's
we don't want you to change your number.
If it happens, it happens, Steve. It's eventually down.
So this is the original. And I really hope that everybody knows a movie this is from.
Amit wouldn't, but
let's not go there. I mean, I love the fact that you made it like this, but how out of place does that Sky Dweller look?
I tried to get it to be like, bro, make it a little bit. Which one's better, Steve?
I think the second one's better.
Because it's more realistic?
I can't believe how good Gemini is. Except for the Sky Dweller looks so epic.
Yeah, I was like, well, I asked Gemini, I was like, my guy. I was like, what's going on with the Sky Dweller here? Like, is it even changed from pick 1 to pick 2? It's from pick 1 to pick 2. I asked it to make it a little bit. Thing. Yeah, like Gemini, do better.
It's hilarious.
I asked it for the second one. I said, make it look like I'm disappointed in myself. I'm looking down. So, I mean, that's what it is. But Frodo's, anyway.
Crazy. Absolutely crazy.
Would I be crazy to get that gold Sky Dweller with the green?
I mean, I think you should. I don't think it's a crazy idea. You're asking the wrong person.
I do know what happened to Frodo. That's the point. Steve has been killed. Steve, you gonna kill me?
Dude, Tim Sweeney. Can we talk about Tim Sweeney for a
Let's
moment?
do it. Let's do it.
This guy is incredible. So I don't know if everybody knows who Tim Sweeney is. He's a lawyer in California. He went parabolic on X over the weekend about SoFi. Just amazing.
I don't know what you're referring to.
I want to read this post. It's freaking incredible. Someone asked why I aggressively dispute these types of short reports for free. I basically don't like guys with huge egos who spout BS to profit off others. Here's an example from the 80s. I was probably one of 2 attorneys in Los Angeles that major properties would hire to contest the county's valuations of commercial real estate for tax purposes. There was a well-known developer who was a total asshole, and they were fighting a $7 million assessment related to their purchase of a very large rundown brick factory. They were arguing in the administrative hearing that they unknowingly bought the property not knowing the cost to demo the building, which they claimed cost them about $3 million, thus arguing that the assessment should be reduced to $4 million, $7 million minus the 3. I was in the audience because I had the next case. Their lawyer was mocking the county assessor rep who was testifying about comparable properties and asking him why he wouldn't conduct or deduct for unknown costs, but also mocking his experience, and his client was laughing. The judge took a break, and I went to talk to the county's attorney and witness who I knew and asked them the following. Why was the demo so expensive? And you know that building has variable rate historical bricks that could sell for $5 each or more, and there were 4 million of them. Ask them how much they sold the bricks for. A light went off in the county lawyer's eyes. The result? The judge determined the value of the property for the 3 years wasn't 4 million each year, wasn't 7 million, but because of the value of the bricks in place of 16 million less cost of removal and sale, they increased the value from 7 million to 18 million, or an additional assessment over 500,000. Moral of the story, don't be an asshole and try to take advantage of people. God love Tim Sweeney. This guy's awesome. He's come on the Friday Night SoFi show several times. He's awesome. Great guy.
Good man.
Tim Sweeney's a great guy, by the way.
I haven't caught any of those. I'll have to check them out.
Yeah, if you're not following Tim Sweeney, I recommend following him. When he puts something out, it's really good. I would definitely check it out.
I'll have to see if I'm following him. What's that? Tim Sweeney what?
Tim _Sweeney _TAR. Yeah, I'm actually going to reach out to Tim and have him come on. We've had him on a couple of times on the show. I'd like to get him on one-on-one. He's awesome.
I remember seeing him. I'll have to give him a follow, Steve.
Yeah, he's really good.
You're a good man, Steve.
So, Matt, this week, I know you said you bought a bunch of stuff, but are you looking to buy more this week?
Let me see. When do we get my next paycheck? Probably not until the following week, unless I see a true massive dip. I mean, I normally just do my bi-weekly buys, but if I do see something absurd, then I might. I don't know. I've never been in a situation where I've had more cash, and this is happenstance. Like, I'm not stockpiling cash. I'm not selling anything to be able to get this cash. It's just some things have lined up to have that. And so I'm just sitting here trying to understand exactly what I want to do. If I want to continue to invest, or I want to enjoy life a little bit more. Do I want to give myself a little bit of a buffer? I don't know, Steve. I've never been in a situation where I've had so much liquid capital. It's a different thing for me. You know, part of me is just like, do I go back into trying to build that passive income portfolio, get a couple $1,000s a month in dividends, where I can just say, you know what, I can take a little bit of sabbatical from engineering and maybe focus on YouTube. I don't know.
By the way, we got news from Amit.
I did
Amit
see the
vibe
website.
coded. So I'm going to read his post and I'm going to show what he did. First time I ever vibe coded something today. Basic website to centralize information around the channel, meetups in one place. It took an hour and I didn't see one line of code. At some point, I even yelled at Claude to fix a mistake that kept popping up, and it was then fixed. Felt like a product manager yelling at an engineer. Imagining use cases for the enterprise with this text makes you realize how early we are. I pay $20 a month, but if it said I had run out of credits, I would have had no choice but to buy more. There's no way I wouldn't have, which explains why the foundation model companies are growing so quick, especially with coding use case. All this flows back to NVIDIA and the semis. Macro is holding everything down, but this trend is not going backwards. So this is the first time I'm seeing the site. It's pretty good.
I like it.
So this is the site.
Sorry, I was answering questions. Yeah, it's really good, especially for people that are interested in the meetups. I really hope we solidify the Singapore meetup here pretty soon.
Yeah, it's solidified. June 26th, coming soon.
I mean, I don't know if it's solidified because there's no RSVPs yet.
Well, you got to get through LA and Chicago first, but it's on here on the map.
I know. Yeah. I mean, it was also supposed to be like in May. So you say it's solidified. I mean, I know we're going to Singapore, but unfortunately, yeah, when's Miami tentatively? Did it say?
I mean, he did a great, this is great.
Yeah, it's awesome.
He doesn't have Miami on here next. I think he said Miami's in January. I was on the phone with him last night.
Oh, Miami's in January? Shit.
Yeah.
I mean, that would be better because it'll be colder. August last year was a little bit hot, but I'd love to do one. I don't know if he's planning on it, but if I have an opportunity to chat with him, because it's been a minute, I would love to do like an annual one. So that if anybody, like, it's always around the same time. Whether or not it's Miami, I don't know where it'll be, but I would love to do Singapore. I hope that we can solidify it. Unfortunately, for everybody that's going to LA, I know there's been chatter if I'm going or not. I'm not going, unfortunately. And then as of right now, I have a business trip scheduled for May that I won't be able to make the Chicago meetup as well. So my sincerest apologies. My intent was my hope was that Chicago was going to be at the end of April, but it just kept getting pushed. And so I hope everyone has a great time. Maybe I'll have Steve set me up as a FaceTime or something. Just kidding. But yeah, feel free that if anybody really wants to get a hold of me, maybe Steve will FaceTime me if you have a particular question. But I'm really curious. I'll love to follow up with you on Sunday, Steve, and hear how it went comparatively to New York. And I'm not trying to say which one's better, which one's worse. That's not my objective by asking, for follow up and feedback. But I'm just kind of curious because this is going to be something that we continue to do, and hopefully we have a little bit bigger of events. And soon enough, I'm sure it's going to be thousands of people joining these things, rather than 200, 300 people. And for that, I mean, we need to have a little bit more structure, hear what's going well, hear what's not. So please offer your feedback. I always pass it on, and the mods talk about it a good bit. They take it very seriously. So if anything, suggestions, even better ifs, problems, the mods are there to help in any sort of way, shape, or form. And really looking forward to hopefully in the future meeting more of you guys. I know it's a bits stuff, but I take a lot of pride in being part of the community and helping in any way I can, because my objective is really to just help people as a whole. It's why I was put on this earth. So,
well, we've been live for an hour and 20 minutes. Why don't we take some questions and then call it in 10 minutes?
You're a good man.
So start shooting off questions in the chat and we'll answer some for 10 minutes.
I did say someone ask about VG. I'm not taking any profit. If I were to take profit, I'd keep it in the LNG space and I'd add it to next decade. But especially if the price continues to remain low in next decade, I just think there's a little severe de-risking in the time period where you may be able to pick up next decade below $10 or shrinking by the day. Steve, do you want to answer that one first?
This one's you.
You don't dabble?
This one's you. Hoarder Alliance.
Alliance for me.
There you go. You heard it. I think we're going to be red tomorrow. That's just me. I'm not buying bonds. Here's why I'm not buying bonds. $1,000 10-year at 4.3% is going to get you how much money? $430 over 10 years. You're going to get $43 every year. Not interested. It's just the math doesn't work for me. Now, if you're talking about putting $10 million into a 10-year bond because you don't want to take the risk, you won and you just want the income, that's a separate conversation. But I mean, if you're just going to put 50, 100 grand or something like that in, I just don't think it's worth it for me. Like there's other income vehicles I would prefer. For me, I'm buying QQQI for myself. I think it's a way better way for me to go.
Yeah, I think for anybody, and I appreciate somebody mentioning that they can see my monitor. Yeah, I'm aware of that. I try not to pull up any proprietary information, so appreciate you looking out for my privacy. I think somebody hit the nail right on the head. You can do very conservative, especially if you're looking at a 10-year, very conservative, out of the money covered calls, something that very unlikely unless you have a massive win, in which case you would way outperform likely your 4% annualized sort of rate. To me, I think doing out of the money cover calls would help more so. And likely you'll get, depending on what company it is, price appreciation better than that. So I don't know. I out of the money cover calls, 4% yield gets maybe a little bit more risky. It's something at a 2% annualized yield with covered calls, though, you can get so far out of the money, especially if it has any sort of implied volatility associated with it. Man, so to me, it's almost like I'd rather own equities in a lot of these things, write the covered calls super far out of the money. And let's just say it does take that move. You're talking about a, 20, 25% move where you're forced to either roll out in time or get your shares taken away. And at that point, if you're really that upset, I mean, you're taking a massive windfall already and you're outpacing. But then again, depending on what stock it is, you can't always guarantee it's going to go up. So it really just depends, once again, on what your goals are. Maybe you have enough where you literally just want to make sure you have the income coming in. You don't want to lose any money. And but to me, if you have that kind of money, you need to be worried about family office sort of stuff. How's your future generations going to be set up? That has some other implications as well. And I think that so many times people, I'm experiencing something like this in my family where it's just like, oh, I need to be conservative, because it's just like, well, if you're investing for future generations, you shouldn't be investing on how you should be investing, right? Because that money is no longer yours, right? You're looking beyond the generations. So if those people, like, let's say you're a 65-year-old, 70-year-old, like, I'm not saying jeopardize your retirement, but if you are saying, oh, I have my little nest egg over here, but this other, let's just say you're fortunate to have $10 million that's going to be passed on, you shouldn't be investing that 10 million like you're investing for yourself. You should be investing that 10 million how it pertains to your future generations. And so I see so many people that, just need that additional logic built into their portfolios. And sometimes it's appropriate to get an investment advisor, because I see so many elder people that they're like, oh, I don't need that much. They might only need $50,000 a year, and they'll be passing on, 7 figures, 8 figures to people. And they're investing it like in bonds and stuff like that. So it's like, well, you only need the 50,000, right? So worry about the future generations and invest as if you're going to hand that money to them, because otherwise you're going to put them in a shit situation.
Well, and I'm going to add something on investment advisors. This is my own opinion. I got nothing against investment advisors. If you are looking for one or have one, know what your fees are, know what you're paying them, and make sure that they're generating more than the S&P. If you are going to, I have spoken to too many of my friends that have investment advisors that have them parked in mutual funds and ETFs and charging them 1.5%, friends and family. And I say to them, you're paying this person 1.5% on your assets, and they have you in 4 mutual funds. You could do that on your own and pay nothing.
Yeah.
You're still paying the VIG to State Street or Vanguard or Fidelity, whoever are managing the funds, and then you're paying 1.5% on top. If you have somebody that is making investments for you and they're earning 15% a year, and you're paying 1.5%, they're getting you a steady 13.5% return, that's gold, because you're getting 2.5% more than the S&P average. I'm fine with that because they're getting paid their fee on additional profit over the S&P. And what I've said to my friends are, go back and renegotiate and tell them that they only get paid on the fact that they make more than 11% a year. You have to have a standard 11% a year profit from them. Otherwise, why do it? Unless you need somebody to take care of all the stuff you don't want to take care of, dispersing your money to you accordingly, doing your bills, that type of stuff, sure. But just for a traditional money manager, no. I'm not in with that.
I've lost friends because of that, Steve. Like, people have asked me because they know I like money. Then I'll look it through their, I've had several people in the past, and they stopped talking to me afterwards because I'm like, I was upfront with them, and they were so upset that they were being taken for a ride that they took it out on me. Like, we're talking, because it was an initial, like, I don't know what it was, like $750 a year or something like that, which is fine if you have millions of dollars with this person. But this person started with like $25,000, and they thought that they were doing themselves a good thing. I was like, you're paying $750 a year, and on top of, I was like, your average fee, I was like, was 4 or 5% at that point. And I was just like, this is ridiculous. I was like, you either need to increase the amount of money you have with this person, where this $750 dollar annual sort of upfront fee plus whatever it was, like 1% or 1.25% on top of everything that they did. I was like, either makes sense or just do it yourself. And they got angry at me because I was like sitting there like, you're being taken for a ride. I was laughing, and I was just like, dude, like, why would you ever agree to this? And I think so many people are just, they think that there's some magical, if it's somebody else, they can put the blame on them, but you have to do your due diligence, because, I mean, you can have some people out there. Let's just be honest. The Series 65 is not too difficult to pass, and anybody can open a registered investment advisory and take you for a ride. I hold myself to the standard of, when I look across the mirror at myself every morning, I want to make sure that I feel comfortable and I feel like I can, say that I did my best and hold the honest truth. There's a lot of people out there and advisors that don't have that. And so, I just would love for, and if you're not paying attention, people are going to take you for a ride. There's people that just show up and like, oh, I don't know. I just don't want to do anything with it. And, I need to hire somebody. And that person's automatically going to just start bumping up the rate because they just feel like this person's not going to pay attention. They have somebody that they can pretty much put them in whatever and still get paid the money and not have to worry about it. Because you have to think about it. You calling and keeping on top of them, that's just more work for them. So
think about it like this.
Really not talk to me for weeks, or I've lost friendships over this exact statement.
If you are putting millions of dollars with a financial advisor, ask yourself this: For every $1 million you put, or even 100 grand, every 100 grand, you're paying $1,500 a year at 1.5%. Every million, you're paying $15,000 a year. What are they doing for that money? Really ask yourself that. If you feel they're earning that money, fine, no problem. But for that type of management fee, they need to either be making you money or make your life easier. Period. I don't know, how hard is it to put all your money in S&P 500 index fund? I mean, if that's what your financial advisor is doing, and I have no idea. I have people who love their financial advisors because they're doing a lot of things, but I've also talked to people who have no clue what they're paying, have no clue what they're invested in, and just have no clue. It's just who their parents use, so they're using that. Or it's who a family friend recommended or something like that. Like, we need a higher level of financial literacy. And I think that everybody in the chat is well past the people that I normally talk to on that, because they are all here because they truly are interested in stocks, finance, economics. The majority of people out there have no clue, and they just don't want to for some reason, which doesn't make sense to me. I've never understood that. Why wouldn't you want to know where you're invested? Why wouldn't you want to know if you're outperforming just the basic index or not? It's crazy.
Ignorance is bliss,
I
Stephen.
guess that
Ignorance
saying's
is
out
bliss.
there for a reason, right?
Yeah. But one individual, I know that we wanted to kind of wrap it up here, but somebody said, what if VG and Next are your only investments? Would you sell cover calls? I can't answer you for that. I can't answer that for you, my guy. If those are your only investments, I think that's a little bit scary. That's heavily focused on LNG, and that's a pretty high risk portfolio. I think I wouldn't be surprised if the stocks go down before they go up in the long term. I mean, I'm investing in the companies for what I believe they'll be worth 2030, 2035, which I think is a fraction of the price that we're seeing today. But at the same time, this whole Strait of Hormuz thing can be resolved in the next week or two, and that would mean that the pump that we're seeing on oil and gas stocks right now might be flushed out a good bit. And so, I can't answer the question for you, but I think that heavily focusing on oil and gas stocks, which is very cyclical in general, is quite risky. But I can't answer that for you. That's all about your risk tolerance, and what your objectives are. So,
All right. Jace, thank you very much. I have not looked into LEU as a nuclear play. I will certainly look into it. I am interested in nuclear stuff at the moment. I don't know if I'm going to allocate money to it or not. I have indirect plays. Right now it's Southern Company. I am considering NextEra Energy. I've been considering them for a while. I'm getting more interested in SMR, but I haven't pulled the trigger. Matt, are you doing anything with nuclear? I know Doogie has been screaming Camco, whatever it is, for a while.
I don't dislike nuclear, but I just unless I can truly figure out a play that I like, it just doesn't make sense. If I like NextEra a lot, that they have a huge nuclear piece. If NextEra dips, NextEra is a phenomenal company, well run, high debt, but I think that that's just inevitable when you get into the utility space. If that takes a large dump at some point, I would gladly swing trade into that again. If not, hold it long term. I think they're going to continue to do well with growing the dividend. But in terms of nuclear specific, I mean, you know me, I hold less than 10 individual positions. I would have to find something that is really interesting that I think has low execution risk, for me to really want to take advantage of that over something like an Amazon or something like that, where I have a lot more confidence in the current space. I think nuclear is just such a volatile space right now, whether you're talking about SMRs, whether you're talking about just nuclear as a whole, and uranium as a whole, the play itself. it's just too speculative, in my opinion, for right now. For me.
I get it. I get it. All right, everybody, we're going to call it. Thank you very much for joining. Please go follow Matt. I will have a big announcement this week. Not sure if it's going to be a separate video or a live stream. There will be a big announcement at some point this week. And for those of you that will be in California, look forward to seeing and meeting all of you. And we're going to get it going. Matt,
I
any last words?
I think your announcement, I won't say what it is because I'm fairly certain I know, but I think it'll make LA super sweet.
Yeah, I'm probably going to make what I'll probably do is make the announcement live at the meetup, and then
That would be cool.
And then do a video is probably what I'm doing.
You should be sure that you have somebody film it when you say it at the meetup.
Yeah, I mean that's probably what I'm gonna. I don't know. I want to make a like a video and actually explain why I'm not. I don't think I'm going to go into that much depth at the meetup about it.
Well, no, I mean, but at least that could be part. I mean, if you need help editing that into your video, I'd be more than happy to help you because I think it's a really cool announcement.
Yeah, I mean, June's bringing papers that I can adopt her, so that may or may not be the announcement. I'm not sure.
I don't know if that's legally possible.
I mean, I don't know if you can adopt somebody that's not a child, but you know. We'll see.
You're the man. I'm proud of you, man.
We'll see. All right, everyone. Thank you very much. Enjoy the rest of your Sunday. And I can promise you it will not be Steve is going to announce he's lactose intolerant. That is just not on the bingo cards. Anyway, thank you very much. See everyone later this week. Enjoy the rest of the day.